Today, we will review Amazon's earnings results from the second quarter of 2023. In the conference call, Andy Jassy, CEO of Amazon, provided business highlights. Here, we summarize them into 6 parts. Jassy starts off by discussing Amazon's e-commerce product delivery. As mentioned previously, Amazon divided one single national fulfillment and transport network into 8 regional networks across the United States in order to save costs. This regionalization strategy is successful, resulting in a 20% decrease in the number of touches for delivered packages, a 19% reduction in distance in miles traveled to deliver these packages, and over a 10% rise in region-fulfilled deliveries, standing at 76%. Some information regarding Amazon's fast deliveries were also provided. Delivery speed is faster than ever, with more than half of Prime members' orders arriving the same day or the next day across the top 60 largest US metro areas. This year, it delivered over 1.8 billion units to US Prime members within the same or the next day, which is nearly 4 times the pace achieved by this point in 2019. Its US Prime free shipping now covers more than 300 million items. Jassy stressed that fast delivery is very important because most customers strongly prefer it. For example, faster delivery times lead to customers buying significantly more often. And so he continues to discuss the same-day facilities. They strategically occupy key metropolitan locations, catering the top 100,000 SKUs. Their design significantly increased the readiness for delivery in as little as 11 minutes. Amazon intends to double the number of these facilities for the improved speed, leading to customer satisfaction and increased sales. Next, Andy Jassy cites that Buy with Prime continues to make strides. Merchants involved in initial trials of Buy with Prime reported an average 25% surge in shopper conversion rate. And during the Prime Day, participating merchants collectively witnessed a remarkable 10-fold surge in daily Buy with Prime orders versus the month preceding the Prime Day announcement. Turning to groceries, Whole Foods continued to lead in the organic grocery domain, displaying robust growth rates and profitability improvements over the past year. In parallel, Amazon is exploring new approaches within Amazon Fresh, its mass physical store offering, by enhancing key business inputs and introducing new concepts across stores. Shifting gear to AI, Jassy discusses 3 key layers, all of which Amazon invests heavily in. For its bottom layer, motivated by chip scarcity and expertise accrued in recent years, Amazon launched its own custom AI chips, Trainium and Inferentia, which offer highly attractive price-performance ratios in developing and deploying large language models. These chips exhibit a 40% improvement in price performance in comparison to other leading x86 processors. And now, over 50,000 customers use AWS Graviton chips and compute instances, which include 98 of the top 100 Amazon EC2 customers. For the middle layer, which he calls Large Language Model as a Service, with many companies seeking access to these models and aiming to customize them using their proprietary data, Amazon Bedrock does exactly that. With access to multiple leading language models like Anthropic, Stability AI, Cohere, and Amazon's own Titan. FYI, Amazon launched Bedrock in April, a platform for building generative AI applications using pre-trained models from AI-focused startups on AWS. Clients such as Bridgewater Associates, 3M, and Travelers are all utilizing Bedrock to develop their own generative AI applications. The democratization of generative AI is a central focus across the first 2 layers. AWS's key AI objectives encompass, first, broadening access to generative AI, reducing training and operational costs for models, providing a range of large language model options instead of a singular choice, simplifying customization for business of diverse sizes and technical backgrounds, and ensuring a secure, enterprise-grade environment for building generative AI applications. These efforts mirror AWS's established track record in democratizing technology infrastructure over nearly 2 decades. The topmost layer is the application that run on these large models. An early and promising application of generative AI is Coding Companion. For example, Amazon Code Whisperer, an AI-driven coding companion that directly suggests code, significantly boosts developer productivity. It's important to note that while Amazon will sometimes build these apps by itself, the majority will be produced by external companies and provided through AWS. Moving on to the healthcare business, Amazon Pharmacy doubled its active customer base over the past year. And RX Pass, which allows Prime members to access eligible generic medications for just $5 monthly fee, including free delivery, has garnered good responses. One Medical's recent integration into Amazon also produced encouraging outcomes so far. Lastly, regarding its technological inventions, which Jesse refers to as big long-term opportunities, Cupitor, Zoox, and Alexa show substantial progress. Although these investments are in very early stages, these innovations are already transforming the possibilities for customer offerings in these realms. Now, let's examine Amazon's financial performance in the second quarter. Amazon's total net sales were $134.4 billion, which is up 11% year over year. North American and international segments showed strong growth with 11% and 10% growth respectively. Looking at each business segment that matches our Amazon financial model, first, the largest revenue contributor, the online store, generated $53 billion, which is up 4% year over year. And third-party seller business generated $32 billion, up 18% year over year, as the third-party unit mix increased to 60%, reaching the highest level so far. Next, AWS revenue was $22.1 billion, up 12% year over year, and advertisement revenue was $11 billion, up 22%. This segment continues to be the largest contributor to Amazon's overall growth, thanks to more effective ads due to machine learning. Next, subscription revenue was $9.9 billion, up 14%. Physical store revenue, which is mostly Whole Foods, was $5 billion, which is up 6%. And finally, other revenue was $1.3 billion, up 26% year over year. Amazon's total operating expenses for the second quarter were $126.7 billion, up 8% year over year. Cost of sales, taking up more than 50% of the total expenses, rose 4%, mainly from increased product and shipping costs. Driven by increased volume, fulfillment expenses increased 5% year over year, and Amazon intends to expand the fulfillment network to further accommodate a broader selection, in-stock inventory, and expedited shipment for both Amazon's and third-party sellers' products. So it seems like Amazon continues to spin its famous flywheel further to grow. Other expenses rose 62% year over year, driven by asset impairments for physical store closures in 2022 and the fulfillment network facilities in 2023. Listed under technology and infrastructure expenses, Amazon's R&D as a percentage of revenue rose from 15% a year ago to 16% this quarter. As a result, the total operating income rose to $7.7 billion, up significantly by 132% year over year. If we divide this income into three segments, North America's operating income was $3.2 billion, compared with an operating loss of $600 million last year. Operating margins have shown 5 consecutive quarters of improvement, reaching 3.9% this quarter, thanks to regionalization and reduction in cost to serve offline stores. International operating loss was $0.9 billion, compared with an operating loss of $1.8 last year. This segment includes Amazon's operations in emerging countries, which explains their losses at the moment. It could take a while to see upward trend in this segment, as it took Amazon 9 years to reach profitability in the United States. Finally, AWS's operating income was $5.4 billion, down 5% year over year. Cash capital expenditures reached $10.4 billion, which are mainly for the technology infrastructure. For the entire year of 2023, capital investments are projected to slightly exceed $50 billion, which is smaller than $59 in 2022. This decrease is primarily due to the reduced investment in the fulfillment network. As usual, Amazon's cash flow was even better than the income statement. Net cash from operations was $16.5 billion, up 83% year over year, and the free cash flow on the TTM basis was positive and improved for the fourth sequential quarter. This was driven by increased operating income in the North America segment, where fulfillment network productivity, operating leverage, and moderating inflationary pressures all played roles. Next, here is a summarized version of the investor Q&A, divided into A. Retail, and B. AWS and AI. When asked about the grocery business, Jesse mentioned that the optimization and leverage potential of the fulfillment network that extends beyond the grocery business. This involves injecting a diverse range of items into the same-day facilities, allowing customers to conveniently access last-minute additions, including groceries, for swift delivery. Moreover, the grocery segment benefits from a dedicated infrastructure optimized for its unique requirements, like keeping the stock fresh and cool. Specifically, the grocery initiative involves refining and optimizing existing assets while also developing new capabilities. For example, within Amazon Fresh, they're introducing refined decor, an expanded selection of products, and a mix of private and third-party brands, along with upgraded self-service checkouts and dash cards for expense tracking. They have also invested considerable effort in improving input quality, ranging from in-stock levels to cost structures. When asked about expansion strategies and margins, Jesse claimed that groceries will have a favorable effect on retail margins, driven by a focus on disciplined growth. Amazon will only significantly increase the number of fresh stores only when the company is confident in resonating with customers and achieving attractive ROIC. And they're optimistic about achieving margins like pre-COVID levels and potentially exceeding them, particularly as their investments and initiatives contribute to operational efficiency and enhanced customer experiences. Now, on to AWS and AI-related questions. In terms of AWS growth trends, Q2 saw a 12% growth compared to 16% in the first quarter. This is still substantial considering the large revenue base. These Q2 trends have extended into July, implying stabilization and anticipation of further growth, especially with advancements in generative AI, large language models, and machine learning solutions. In terms of investment priority, AI is a top priority across all Amazon's business. Amazon is committed to harnessing the potential of generative AI in multiple facets of operations and customer experiences. Every business within Amazon is actively engaged in various generative AI initiatives, spanning from optimizing operations to enhancing core customer interactions. Regarding the effects of AI on AWS CapEx, the plans already include a significant allocation for large language models and generative AI within AWS. Jesse considered this a positive challenge, as increased CapEx would reflect successful customer adoption and utilization of their services. Lastly, here are the two interesting pieces of news that Amazon shareholders should be aware of. First, Amazon is set to meet the FTC as possible antitrust complaint nears. FTC has been investigating whether Amazon engages in anti-competitive practices, including favoring its own products over competitors on its digital platforms and bundling practices of Amazon's Prime subscription service. Second news is that KB Kookmin Bank, a South Korean commercial bank, has collaborated with AWS to power its company-wide digital strategy and its super app, Star Banking. This app offers 70 financial services of KB Bank subsidiaries and integrates financial solutions, providing a comprehensive user experience to its 11 million monthly active users. This move is expected to save the app-related operating costs by around 20%. This is an example of how AWS is expanding its customer base and enterprise customers benefit from the saved costs. Okay, that's it for today's Amazon analysis, and please hit the like button below if you found today's content helpful. Thanks guys!